The foundations of former President Thabo Mbeki and other statesmen have announced their withdrawal from the August 15 convention of the National Dialogue and its preparatory task team. Financial concerns and a perceived shift away from a citizen-led initiative prompted the decision. A statement from the foundations says the convention should be rescheduled for a month later. This will allow for adequate preparation, coherence, and participatory integrity. South Africa has moved closer to becoming a full sovereign member of the African Export-Import Bank. That's after the cabinet gave its approval for the plan. The move would give SA access to new trade investment products. This comes at a crucial time as the country's tariff row with the United States has increased the need for new export markets. No indication has been given as to when South Africa's membership will be finalized. Meanwhile, Cabinet has also approved South Africa's participation in an international effort to boost the marketing of real diamonds. Lab-grown gems have increasingly grown in popularity due to their lower environmental impact and competitive pricing. And as a result, the natural diamond market has struggled over the past 3 years. South Africa is the world's sixth biggest diamond producer by volume. And Mines Minister Gwede Mantashe says lab-grown diamonds are eating into the country's dinner. He added that the marketing of natural diamonds is therefore a necessary intervention. Hulleman has completed its 500 million rand investment in South Africa's local can market. This is part of the group's strategic reset and brings to a close the firm's decision in 2022 to capitalize on the growing demand for locally produced cans. The funds have been funneled into a wide-body can production line. The group hopes to achieve commercial readiness on this by the end of March. Tangela has warned of a hefty profit slump. The coal miner says half-year headline earnings per share are expected to decline by up to 85%. The firm has cited ongoing challenging market conditions as a primary factor affecting its financial performance. It's also pointed to restructuring costs of 285 million rand related to the planned closure of its Goedehoop and Isibonelo operations. More detail will be provided when the company opens its books on the 18th of August. Looking further afield now, U.S. President Donald Trump says he will nominate Council of Economic Advisers Chairman Stephen Miron to serve as a Federal Reserve Governor. Here's more on that.
Donald Trump said Thursday he would nominate Council of Economic Advisers Chairman Stephen Miron to fill the vacancy on the Federal Reserve's governing board. In a social media post, the US president cited Miron's PhD in economics and a track record serving his administrations. However, the new man's term will only run until the end of January, with Trump weighing up who to fill the 14-year board seat that opens up after that. Miron has called for a complete overhaul of the Fed's governance, including giving the White House more direct control over the central bank. He says governors should serve shorter 8-year terms and be subject to removal by the president. The appointment comes as Donald Trump tries to pressure existing Fed Chief Jerome Powell into cutting rates more quickly. He's also weighing up who should replace Powell when his term expires in May. Reports by Bloomberg News suggest Fed board member Christopher Waller is now the front-runner. He has reportedly impressed members of Trump's team, but has not yet met the president. Waller argued for a rate cut at the Fed's last meeting in July. He says tariffs won't drive a big spike in inflation and argues that a slowing labour market needs help from lower rates.
And the U.S. government has promised to amend a presidential executive order to remove overlapping tariffs on Japanese goods. That's according to Tokyo's trade negotiator Ryosei Akazawa. This comes after talks in Washington to fix what he called a regrettable error. Let's take a look.
Japan says the US has promised to clear up confusion over a trade deal. Tokyo thought it had agreed to a 15% levy on its exports in July, but media reports suggested the rate would actually be stacked on top of existing tariffs. That meant some goods could face much higher levies than expected. Now, Japan trade negotiator Ryosei Akazawa says Washington has agreed to fix what he called a regrettable error. He says US Treasury Secretary Scott Bessent has promised to ensure that tariffs are not stacked. Bessent and Commerce Secretary Howard Lutnick also reportedly said they would ensure auto tariffs fell to 15% from the current 27.5%. There was no immediate comment on the claims from either the Treasury or Commerce departments. The confusion comes after much of Akazawa's earlier agreement with Washington was never put into a signed document. That left a degree of ambiguity over the terms of the deal and caused Japanese firms to worry that they could face higher tariffs than anticipated.